Hi, welcome to my YouTube channel. I am Sandra, aka Sandra Baby, aka Designer Special. Like, I'm changing my intro to welcome to online accounting class. I think that's much better than the hi and the hi and the highs. So let's jump right in. So today I'll be talking about the newly effected Finance Act. Yeah. So the Finance Act was signed by President Muhammad Buhari, and it took effect on January 1st, 2021. It has about 80 amendments to 14 different laws and about 20 key changes. So this video will be in two segments. This is the part one. I'll be having the part two much later to talk about we'll be talking about 10 now, and we'll be talking about the remaining 10 in our subsequent videos. So tune in and stay right in. Please, I'll encourage everybody to watch this video to the end, because I'll be putting in a slide view of the summary of the act, not just me explaining. This is more like the explanation, but the summary will be in the slide view. So please, you're encouraged to watch to the end. Let's learn together. So thank you. But first of all, before I jump right in again, please, I shot a full video of about 25 minutes only for me to mistakenly delete the video. I don't know how. And you know the wonderful thing, the Spirit of the Lord always knows, always tells us things, but we never listen. My spirit told me immediately I shot that video, I should on my system and collect the video. But I was like, no, I want to do another one before I put both in my system. And lo and behold, I was deleting and I mistakenly deleted it. Like, I don't know, if not for the love of what I'm doing, please, let's just continue. So 10, number 1, minimum tax for companies in respect of return for years of assessment due between 1st of January 2020 and 31st December 2021 has been reduced from 0.5% to 0.25% of gross turnover less franked investment income. Two things to note from this one. First, it is only the reduction from 0.5 to 0.25 or is only for the years of assessment of between 2020 and December 2021. It means that from 2022 years of assessment, the minimum tax rate will go back to 0.5%. That is one. Two, for the gross income, or rather should be the minimum tax should be calculated on gross income less frank investment income. Now, what is frank investment income? They are more like incomes a company gets from other investments. Let's say, for instance, you have other investments in other companies and in which you are expected to be paid dividend. Such dividend, before it's being paid to you, dividend is paid net to the shareholders. So it means a certain tax has already been deducted by that company before giving you your net dividend. So you cannot subject that same dividend to tax again. It becomes for double taxation. That is why it will have to less such franked investment income before from gross turnover in order to calculate our minimum tax. Now remember, from 2020, minimum tax percentage is not based on the old law, which talks about 0.5% or on this, 0.5% on that, on net asset, 0.25 on turnover for the year, and 0.25 on maybe profit for the year. It has changed. But take cognizance of the question that is set in case of your exam, because I want to believe that I can accept adopting this, especially because it's just for 2 years, it's just for a period of 2 years, 2020 and 2021. Be very conscious of the question. If your question in which you are calculating SITA on is based on 2019 year of assessment, it means you are going to be using the old rate. But once it's 2020 and 2021, please use the new rate and be conscious of how you calculate your minimum tax. Now, for the sake of company income tax, you are expected to calculate your tax payable based on your taxable profit, and also calculate minimum tax by the side. The higher of the two is what the tax authority is going to take. Now, why all these laws? First of all, is because of all the effects of COVID-19 on on companies. So government is trying as much as possible to ameliorate the harsh effect of the pandemic on all companies. So that's that for that. Thank you. Then secondly, cost of donation made in cash or kind to any fund set up by the government in respect of any pandemic or natural disaster to be tax deductible, subject to a maximum of 10% of accessible profit after other allowable donation. Now first, remember, donations they have allowable and non-allowable donations. It still remains same according to schedule 35 of CETA, if I'm not mistaken. So those ones that are allowable are still allowable, but a new allowable donation is now permissible, which is donation made in cash or kind to any form set up by government for natural disaster because of COVID. So it means when an organization makes such donation, you have to make sure that it doesn't exceed 10% of accessible profit after other allowable donation. I'm going to do a full video on this donation because I feel we need more like a blackboard explanation than just explaining by words of mouth. But take for instance your donation in a year to government fund set up for natural disaster is 900,000, and 10% of accessible profit after other allowable donation is #1,000,000. It means all the 900,000 is allowable, but if it is 1,100,000 and 10% is just #1,000,000, it means we're only allowing 1,000,000 naira. The remaining 100,000 naira is not allowable. We're adding it back. Now there's a lot of debate based on what accessible profit for the sake of company income tax is. Some people debate on that accessible profit is before loss relief and capital allowance, while some say accessible profit is that profit just before you deduct your capital, you do your capital allowance computations. But whichever way it is, two different strokes for different folks. But the most important thing is that accessible profit for the sake of any fund set up, any accessible profit for the sake of any donation you made for in respect of COVID or any natural disaster to the government is only allowable to the maximum of 10% of accessible profit after other allowable donation. Means you have not removed your loss relief, neither have you removed your capital allowance. So thank you. Then number 3, compensation for loss of office up to 10 million naira is exempted from capital gain tax. Tax due on excess above 10 million is to be deducted by the payer and remitted within the time specified under payee regulation. So if you have lost office up to 10 million naira, you don't pay capital gains tax, but above 10 million naira, it's going to be subjected to tax, and everything should be done under the umbrella of payee regulation. So that's that for that. Then number 4, FIRS, the Federal Inland Revenue Service, may prescribe the form of account other than audited financial statement for small and medium companies as defined under CETA. It means that remember that the only account the Inland Revenue Service uses in respect of tax is always audited financial statement, because it must have been audited by independent auditors, and they must have to show that the financial statement has shown a true and fair view of the state of affairs of that company. But in this Finance Act, it's talking about that a small and medium scale enterprise may be asked by the service to bring any other account other than their audited financial statements. So they may be asked to bring their statement of affairs, or maybe given a form to fill to declare their income, and asked to bring their bank statement as additional document or as a supporting document to such. So that's what this section of the Act is talking about. Number 5, service of notice of assessment and objections under Company Income Tax Act may be done via courier service, email, or other electronic means, as may be directed by the FIRS in a notice. Tax Appeal Tribunal may conduct its hearing remotely via virtual means, using such technology or application as may be necessary to ensure fair hearing. Like, I'm so excited about this one, because I could remember when I was still in practice, and I was working in an audit firm, and we always submit objection letter like back to back. And take for instance, you're working in Abuja and you have to submit an objection letter for a company in Gombe. In this COVID, like in this pandemic season, like like this is so this is like my best part of the act that was revised, because it means that such objection letter can now be submitted through the mail. You can scan and send to someone maybe who is in Gombe to help you submit it, because previously the most tax authorities will not accept any other letter of objection aside the one in which the signature is fresh. Like you can even touch the biro and see that like the ink should stay in your hand. That's just a digression. But they want the original, they don't accept scanned copy. But what this act is saying is that now the Federal Inland Revenue Service should ensure that to accept such, and tax reconciliation meetings cannot be joined by virtual means, and not that employees need to travel. So what does this tell us as accountants is that accounting is changing. To be up to date, to keep your feet on the ground, to be up to date with what is happening now in terms of technology, you must be technologically savvy. You must be up to date. You must know what you are doing. It's not you're in or you're out. Choose one. Choose here today who you are going to be with. Are you with technology, 21st century technology, or are you in the not jet age, in the manual age? So that's what he's trying to say actually, that as a result of COVID, as a result of the pandemic, things are changing. So this act is just trying to say, please, you can do your tax reconciliation meeting via e-presence or any other means, and not in person, face to face, just to ensure that at the end everything goes out fine. Thank you. So number 6, public character for the purpose of tax exemption requires an organization or institution to be registered in accordance with the relevant law in Nigeria, and does not distribute or share its profit in any manner to members or promoters. Now, what are public characters? Public characters are companies that are set up not for the purpose of making profit, but for the welfare of the citizens. So even though they make profit, that is not their intent. And now the mode of registration it shows from the mode of registration that this company is limited by guarantee. That's one. So first things first, limited by guarantee. Number 2, it is not set up for the purpose of making profit. For instance, non-governmental organizations, churches, mosques, and schools. I have a forwarded message in my WhatsApp that talks about a school that was subjected to company income tax, and it got to tax tribunal, and the school was arguing, "You are not supposed to pay. We are a charity organization. And the revenue authority told the school that, "Hello, let me check your mode of registration. A limited liability company. You are not limited by guarantee, so you are paying your tax." So first, the mode of registration. Second, it is not set up for the purpose of making profit. That's that. Number 7, a small and medium company engaged in primary agricultural production may be granted pioneer status for an initial period of 4 years and an additional 2 years, making a total of 6 years. Previously, pioneer status was 3 years initially, 2 years additionally, maximum of 5 years. But now what the act is saying, 4 years initially, 2 years additionally, maximum of 6 years. So it means if your pioneer status maybe ended in the year 2019, December 2019 or 2020, for instance, you can claim another pioneer, an extra 1 year for this year. You write a letter to the tax authority, and looking at certain things, maybe a small or a medium company, they may grant you an additional 1 year. All these are to cushion the effects of COVID-19 on companies as well as private individuals. Anyway, number 8. Gross income for personal relief purposes has been redefined as income from all sources, less non-taxable income, exempt items, and income on which no further tax is payable. In the case of an enterprise, less all allowable business expenses and capital allowance. So initially, gross income was earned and the total of earned and unearned income, but it has redefined the definition of gross income to include 1. Income from all sources, even the one inside your saving box, your piggy vest, income. less non-taxable income, and this is more like an assignment. That please, what is one non-taxable income for the purpose of personal relief? For a company, I know what's one non-taxable income that are not subjected to tax. But for personal relief, what are the children under non-taxable income? Then let's exempt items that are exempted from tax, and income on which no further tax is payable. Income that has been previously taxed, that no, we are not subjecting to tax anymore. That is that for that. That's the new definition of gross income. Thank you. Then number 9, exemption of low income earners earning minimum wage or less from personal income tax. Hallelujah. Remember, minimum wage was increased from 18,000 to 30,000 naira, and even with the 30,000 naira increment, like I don't know about how much was a bag of rice during the COVID era, and even now after the COVID, like I don't get it. So those for employees earning 30,000 naira and below, please don't pay personal income tax anymore. Like, just enjoy your money, enjoy. But the purpose of this basically is to ensure that citizens have enough disposable income. Citizens within that bracket basically have enough disposable income so they can save. Like you know what I mean. Like like people are not smiling. So finally, goods liable to excise duties have been expanded to include telecommunication services provided in Nigeria, as may be prescribed in the law or an order issued by the president. It means that excise duties has been expanded to include what? To include telecommunication services provided in Nigeria. So you now pay excise duty as may be prescribed by the president or any other law. So I think I've mentioned 10. I've listed 10 key points on the newly effected Finance Act of 2020, and my subsequent video will be taking care of the remaining 10, because I remember I mentioned that there are 20 key changes, about 80 amendments to 14 different tax laws, and 20 key changes. So I cannot shoot all in this video. I don't want it to be so lengthy. So we're going to take the remaining 10 in subsequent video. I hope there is nothing that I'm missing. I'm trying to scroll through to be sure I mention everything I'm going to mention. For this donation, as I said earlier, I'm going to do a classroom video on it on a blackboard to explain it better. Then that's that for that. So thank you for watching. Saying hi to you. Thank you for watching this video. The previous one I shot was about 24 minutes, but funny enough, this one is less than 20. Maybe because I'm actually very fast in this. But bless the name of the Lord for giving me the strength to sit down again and shoot this video once more. Because it's funny. It's not funny. It's not funny at all. So we're going to see in the next video. Please, for those that have been asking for my contact details, I will be sharing a number on the description box below that I can be reached through. WhatsApp only, please, no calls. Like WhatsApp only, and we'll get stuff on here. Please don't forget to like, share, subscribe, invite others to join this wonderful forum, and we'll see you in the next video. I'm going to be sharing wonderful videos from my friend Mr. Chiri Carlo. For those in Port Harcourt, you have to meet him. He's full of a lot of wisdom and knowledge in accounting. And I've already told you I'm going to arrest him when next I come to Port Harcourt. We're going to be shooting videos back to back, and be tapping from his wealth of knowledge and experience. How about that? So see you in the next video. Take care of yourself, love yourself more, enjoy, and be happy. Basically, be happy. That's that for that. Then the next after this video will be a slideshow of every summary concerning this act. Thank you for watching. and we'll see you in the next video. Bye.